You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Hello, Jim. Good to be back.
We're seeing some interesting movement in the markets and in precious metals. Perhaps not the kind of movement people would like to see, but you say you can survive and even thrive when you're at the financial abyss.
I believe so, and that's where we are now, Jim, in my view. Things are been compared to 2008, that it could be as bad or worse. Certainly the psychology is very similar, and I think the panic may be, intensifying on people's part because there's so much more going on now, even than there was then, because we have the potential for war in the Middle East, etc. But I believe that, and we've talked about this before, the possibility that prices could get lower than we could ever imagine, and that's where we are now with some of the best companies in the mining sector. And I'm really motivated by Harry Brown, who actually was one of the forerunners of discussing the gold and silver bull market as it was just tiny, just getting started in the early 1970s. He wrote a book about this, and he also wrote another book called How I Found Freedom in an Unfree World. And this is what really intrigues me. It's influenced my thinking for many years. He talks about how we get into emotional and psychological boxes. And if we want to get out of that box and grow as individuals, we have to ask ourselves, what's the box? What's the price that I'm willing to pay to get out of it? Or am I willing? And some people aren't willing to pay that price. Or maybe they've never even asked themselves. I think if we ask ourselves what price we're willing to pay to survive and thrive in this environment, then we can ultimately make a lot of money and keep our risks under control.
Do you have any specific examples of how you can do well when everybody else seems to be doing bad?
Well, first of all, I think we go back to the 4 steps of looking at what's going on, observing the big picture, and then orienting ourselves to it. How do we fit into that psychologically and financially in our risk-taking profile and things like that? Then we make a plan and we decide what it is we're going to do. And then we carry it out. And so I look at this, we've talked about the big picture a lot. I think our listeners all have a good idea of what's happening here, and it's evolving and new things added to it. So it's a pretty big, stew to look at here. But if you decide that, for example, as I believe, that the gold and bull market, silver bull markets are intact, then you're looking, if you have not committed all of your funds, to adding to your positions, and you do so into extreme weakness, and you do it at several price points. And if at some point after you've executed your plan, if you bought all that you intend to do, then you simply just sit and wait, as Stanley Kroll would say, be right and sit tight.
Has this panic been sparked by Ben Bernanke saying, I'm very close to ending this free money deal where in the U.S., of course, the central bank is lending money out to the major banks at 0%. In Canada, it's 1%. Is this the end of cheap money?
Ben Bernanke's comments have really caused a lot of panic in the market because people were depending upon that cheap money going out indefinitely. And the reality is the Fed doesn't have any choice. They've already started backtracking on that comment. And we've seen the 10-year bond rates make the largest rise in the shortest period of time since 1962. And that's what's affecting markets all around the world. So we have all sorts of discord going on here. And in this we have flat to lower metals prices, and people are bailing to get out of these companies. And it's really a buyer's dream if you have the courage and a little bit of resources and the plan to rationally go in and buy companies that you've researched carefully, knowing that most of them should survive. A couple may blow up, but if you put your bets on several high-quality companies, the odds are that you'll be very happy, probably sooner rather than you think. I remember 2008, how these prices had gone down to levels that were just amazing and on the downside, and 7 months later, people that had the courage to buy good companies were up anywhere from 400 to, in some cases, 40 times their money that they had invested in it at that level. And I think we'll see that type of thing again. We certainly may not be at the bottom of this washout, but we're right in the middle of it as far as I'm concerned. And I think the potential here is just absolutely fabulous if you can keep your nerve.
Why would Bernanke make a statement that would cause so much panic when the U.S. appeared to be well on its way, finally recovering from 2008?
I think he's trying to walk the middle line and against criticisms that they're putting too much money out there, although that hasn't caused inflation to any great extent. There is more inflation than they state, but it's not runaway or anything like this. But they actually think that they have this hubris that they can fine-tune and manipulate the economy and make things work out just right. And I think if they had a little more humility, and maybe he's getting some of that now as he's realizing that he doesn't control as much as he thinks. At any rate, we have to base our views on a little longer view than what he makes a statement on every month and try not to get crushed in the process, because for the short term, the actions of the Fed, or the perceived actions, are definitely the 800-pound gorilla.
Canada has a very unique thing, the venture exchange, to encourage people to get into what are very risky investments. And they're very concerned, if you're an investor, about over-regulation, turning this market that they admit usually loses money, but if you have a penny stock that's a winner, you can become a millionaire overnight. Is there any chance that perhaps governments do think they know everything and they are slowly choking the golden goose?
They really are, and there's a movement in Vancouver and Toronto as we speak by associations to get this regulation loosened a little bit and still keep the protection for the investor, because, as you mentioned, regulation can absolutely stifle development. And the large producers in the metal sector need these smaller companies in exploration and small producers to feed their pipeline, because they're continually producing and they have a wasting asset. They need to replace those resources. So this is a very hot topic in Vancouver and Toronto, and it's something that really needs to be addressed effectively. The key here now for us, as we're watching this situation, I think, is to try to find the very strongest miners that, in our view, after our research is done, that we believe will survive. And, you know, my work with David Morgan in the Morgan Report, we're always looking at these companies, and we're looking at our portfolio to see if the companies are still doing what they plan to do and if they still look viable. And I'd like to give you some examples from my own personal investing without mentioning the companies' names, but letting people know that there are a number of good companies out there. I'm going to give half a dozen examples here with some little clues, but, you know, I'm guessing that there may be a couple hundred at least really good quality companies that are still going to be around producing and making more profits for their shareholders in the coming months and years. And so just to give you a kind of an example of ones that I've been following, there's a silver producer in Mexico which has 3 producing mines and half a dozen exploration projects. I've actually written a couple of reports for the Morgan Report on it. It's been in our portfolio. There's another silver producer in Mexico that has 5 producing mines, and it's continually expanding its resources. There's a soon-to-be producer gold, platinum, and palladium mine in Brazil with very high grades. There's a gold, copper, palladium streamer that has projects in Mongolia, North America, and Brazil. And another one that I followed, I hold shares in these companies. This is a company that traded for about $7.50 2 years ago. It traded for $2.60 the last time I added to my position, buying into declines, as I discuss here with you all the time. And that was a few months ago. And do you know what? Yesterday, Jim, I added more to my positions at 94 cents. So, and I don't know if this keeps going, I may be adding some more at 49 cents. But the point being, I really didn't expect it to get that low, but it did, and I had a few dollars left to allocate to it, and I took the position yesterday. It was not easy, but I believe, after doing the research, that it was the right thing for me to do.
If there's any kind of an economic panic, we know people usually try to improve their position on precious metals. Do you see the same thing happening right now?
I do, and I was speaking to a major seller of physical metal actually Friday, and as you know, the metals were hammered a lot last week, including on Friday, and he told me, and this has been echoed by others that I've spoken to, that the buy-sell was about 10 to 1. And it probably would have been 15 or 20 to 1, except there were a number of people that were waiting to see if lower prices would be in the offing. So on the buy side, all over the place, it's really, this continues and keeps up. And it's just totally the opposite of what you would expect if the metals were going to keep going down and staying down. So a lot of people are out there putting their own money on the line, buying the physical, buying the miners. And you look at some of the insiders, the published views of insiders in Canadian mining stocks, and many of these, you're seeing record buying by insiders. These are the people that know their company the best and bet on these things. And when this finally turns around from whatever level we end up, or I should say down on, we may be in that level now, but these companies, many of them are going to rise. Just the normal rise would be 5, 6, 7, 8 times from where they are now because they've been hammered down so much. And so I personally believe that people that can average down with a plan that they have, how much they want to commit to a certain company, this type of a thing, I think they'll be richly rewarded by holding those companies which turned out to be ultimate survivors.
As you said, be right and sit tight.
That's right. Stanley Kroll said that, and that's been something that has always electrified me. I think of Sir John Templeton, who passed away a few years ago, but he was one of the greatest investors who ever lived. And, he took short positions in the tech stocks around 2000. And this is the thing people have to understand. You and I, nobody goes in and buys the bottom. We don't know that till later. And so we have to figure we're going to be early, and it's going to go lower, and we don't go on margin, but we go in just like Sir John Templeton did after we've really come up with a good plan. We've decided what the price is to get out of that emotional box, and we've decided that, by golly, we are going to pay it because we want to see if we can't make outsized gains by going against the crowd in a rational, controlled, focused way. Just like the man who walked across the Snake River Canyon, it was the Grand Canyon a few days ago, one of the Walenda brothers, and I watched that in real time. I found that to be massively, not entertaining, but massively inspiring by the way he focused on the goal. And I think if we focus on our goal in our trading like this, we'll have the same positive results that he did, walking across an abyss that was 1,500 feet deep, and he had nothing to keep him from falling off. He didn't have a rope in case he slipped or whatever. We don't have to take that level of a risk, but in a way, we're walking across an abyss, but with our own emotional control, we can modify the risk so that it's less than he did, but still give us the potential for great rewards.
Well, he knows a fall of 50 feet will kill you just as sure as 1,500 feet. So what's the difference for you if you keep focused? It shouldn't matter whether the hole is 1,500 feet or 50.
Right. You don't need to look down. You just need to focus on that goal on the other side. And it's not easy, but it's doable. And if people like Sir John Templeton can do it, and Stanley Kroll, and David Morgan, and Jim Sinclair, and John Embry, and a dozen others that I respect enormously, by golly, you and I can strive to do the same thing. We might not be as successful, but we can be successful in our own right.
David, thanks a lot for chatting with us.
I've enjoyed it, Jim. You have a great day.
You too. My guest has been David Smith, the senior analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. You can contact us at info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.